Okay, good morning, guys. Morning. Good morning.
Morning.
Nice. So I got up a little bit later than expected this morning, so heading to MT4 late.
I would have bomba clock.
Ed, this is not the everybody's here, right? Not just the lab.
Me know, man. Me know. That's
All right, let's vibe. I'll go the entire screen and just jump to MT4. All right, so I'm gonna mute everyone as usual. Okay. This thing has been annoying me all weekend, that Zoom thing. But anyway. So let's say you got to your charts late like me, and your plan is to find some high probability scalps. I kind of try to think out loud what my thought process is on days like this. So as usual, we jump to DXY. I'm gonna stick to a M15 chart only today. No daily charts, just M15, and I'll talk about why. So the conditions are already low probability given that it's a US bank holiday. Generally, on US bank holidays, DXY tends to be weak, right? In my 3 years of trading, I've seen a couple times where this is not necessarily true, but in terms of a probabilistic standpoint, I'd say that most of the times, or over 50% of the times, DXY tends to be weaker on bank holidays. So I'm heading into the market with the perspective that I want to see lower prices on DXY, higher prices on NAS, higher prices on AU. Gold is an anomaly, so I won't be looking at gold for that reason. And UCAD, I look at UCAD as well. And if we have time, as usual, we'll look at other pairs, all right? So let's say we're looking at DXY right now and we're expecting lower prices. I don't need all of this right here, right? All of this information right here, not very needed. So I'm just gonna go ahead and go to, oh, sorry, this is not. Hello, no voice for me. No one who is not able to hear anything. You guys can hear me, right?
Yes, sir.
Oh, okay. It's like, what? So I'm trying to switch templates again. Since that Zoom thing is stuck in my way, I have to do it by brute force. So I have my naked charts and I have my period separators on. Instinctively, we look at the last 3 days and looking at the M15 charts, right? Looking at this price action right here, in the last 3 days, we're not able to see any market structure that's currently above this current market price. So if you look to the left, there's nothing here. So whenever I'm looking at the chart and I have 3 days of data on an M15 and I can't see where this is drawn to, that's when, even though I don't want to go to a daily chart, I'm gonna say common sense requires that you go to a daily chart or go to a higher time frame above M15 so you can see what are we trading to and have we gotten there, right? So let's do that. And I'm gonna go change time frame with brute force as well. I'm gonna scale up the hourly chart, not the daily yet, right? No need to go to the daily because I'm just looking for a high probability reaction on a lower time frame. Just above this current market price, we have this short-term high right here. It's just below a fair value gap. So I'm gonna tag that and I'm gonna tag that fair value gap. Now that I've found the air quotes market structure that's above the current market price, I want to look at what's the likelihood of price trading here. what's the likelihood of price trading here and then stopping, and what's the likelihood of price completely reversing from exactly where we are right now. This is a premium fair value gap. By looking at it, I can tell that it's above 50% of this current range that we're trading. So to remind myself of that and not try to switch, I'm going to find 50% of the current range right there. Then I'm going to look above this 50% and check, is this efficiently traded? Because if it is efficiently traded, I'm going to move my fib from the high to the 50% and frame my range about that. So let's take a look at the upper 50% of this range to see if it's efficiently traded. So the last time we had a high traded through was here. We have, let's include a little bit of gems in this one. Relatively equal high sitting right here. Then we have consecutive up close candles right there that trades through both of the highs. So the thought process is, when price traded here, this area was an old high in the market. Doesn't matter the time frame. We traded away from that. Decent reaction, not magnitude or momentum candles. There's no huge displacement, but it rejected that price level. So persons watching price in real time would be thinking that relatively equal highs, that's in the market. Depending on your thought process, we're thinking liquidity, or we're thinking sell and put the stops here, or we're thinking buy the breakout with stops below the low. So at this point in time, when the market was here, I'll put the arrow there. When the market was right there, the general sentiment from the market would be that there's a whole lot of interest in doing business around here, both from persons who are trying to buy, persons who are trying to sell. And I'm not saying just sellers and buyers in the sense that, we're thinking that sellers and buyers are moving the market. We're thinking about this level from the perspective of, if there's interest to do business here, there's going to be liquidity building up around this price. So where's the liquidity? Above the highs and below the lows, trading up to the highs, especially the lows that did not get taken on the run up. So if price didn't sweep lows and then push up, that's liquidity. So we have liquidity being taken right here, market structure shift as usual. Once price trades below this low here, if we have multiple wicks, it requires a rebalance there. No multiple wicks, then the displacement can stay open. Breakaway gap. So the displacement starts all the way up here, and then the imbalance is right here. Retracement filled the imbalance, then we moved lower. I don't see a reason to go higher. So I don't need my fib there. I need my fib in that portion of the range. No reason to go higher. No need to factor that in my calculations, and no thinking down here. So where is the current interest in the market between this low and the current market price? I'm looking for the lows that were created in this push up that did not get taken before an impulse. This was an impulse right there. That's a drawn liquidity. And that's all I need. So now I go back to M15. Too bad I can't expand this like trading view. But I'm looking now at as a drawn liquidity. So the market for me is now bearish and we're in premium. So do we have buy side liquidity being taken? So we can start looking for sell side liquidity and dealing range, or do we have premium arrays? Zoom up. We have, the last time buy side was taken was above these highs right here. That's the last time buy side was taken. So if I was here in the market early, I'd be thinking if buy side is taken here, this candle should be my order block. Price trades higher, creates an imbalance above it. That imbalance should hold some significance in the market. I don't know what yet, but I'd be watching that imbalance. There's an imbalance inside my order block right here. So refine my interest to that level. There we go. So with that in mind, I now have a range of price that I'd like to see price trade below. Once it's a range, you grab your fib. And there we go. This is all I need now to make a decision of do I trade now or not. Lows below here were just taken. So we'll be waiting for price to retrace inside here to here before going low. That happened, took this low, retracement happened. So now, let's see if we can get this run. That's what we're looking for. So my bias is confirmed now to go to the pairs I actually trade. So I'm looking at AU first regarding RTO for voids. The instances where there is no void, OB is mitigated as well, but price still pushes to retake. So what do we make of that? I'm gonna get back to that. It's gonna break my chain of thought. All right, now. This structure looks very similar to the dollar. What I'd be looking for here is where's the range and where are my bullish arrays or buy side liquidity, sell side liquidity rather, sorry. Here's my range. We're below 50%. Do we have an order block below 50%? Do we have sell side liquidity below 50%? We just had sell side taken right there. And it's 9:48 now, which means we're heading into Thursday's delivery. So the low of the week is generally, well, not the low of the week. There's going to be a low that should be formed sometime inside here within the next, let's say, 30 minutes, right? Within the next 30 minutes, I'm going to expect a low to form, and I'm going to expect a market structure shift. When that market structure shift happens, I'm going to stock longs. So to build up to that anticipation, I start looking at the down candles created inside here, and do we trade above the highs? Still no trade, right? I'm late to the market. I'm not going to rush to get in a trade. I'm simply framing the market around my rules to frame out what would be considered high probability based on my thought process. So here's a down candle we're currently trading in. I get interested in AU if we trade through that high. It's not there yet. I walk away. Let's zoom up on NAS. Same idea. We don't need all of the. I keep trying to do that. Templates. Nature chart. Trading view spoiling me. I'm looking for the remove objects button. Okay, so let's take a look at NAS price action now. Slight variation. 9:30 has already passed. I want to see what was that 9:30 price action like. It was a huge move lower. Where was the target, or where was the draw on liquidity when price was moving low? Sell side liquidity in discount or bullish arrays in discount? Discount coming in here. Do we have sell side liquidity down here? Well, the last time we had an impulse was right here. Lows taken prior to the impulse. So the liquidity is going to be at lows formed after the impulse that weren't taken. There we go. So price just stood the liquidity resting in the market. This is now a huge down candle. Not trading below here. So if there's a swing low, price trades below the bodies of the swing low and then rejects. Rejection blocks come into mind. So now I'm looking for price to reject here because this candle on this time frame is huge. Waiting for this isn't the most ideal thing to do. So since my, let's say, bias Since my bias has been established, I'm going to go to a lower time frame. I'm going to push out the last area of liquidity, and I'm going to look for down candles on M5. Take that fib off. It's getting a little bit crowdy. And I'm looking for the willingness of price to trade through the highs of the down candles form right here. That's it. I'm just trying to determine order flow. These are the down candles here. I don't see any price trading through this high, so I'm not interested in buying yet, even if I'm bullish. I don't see price trading through the low, so it's a stay flat condition right now, waiting. You catch same idea. Here we have our range. Here we have buy side taken, impulse. Any highs between here and the low should be housing liquidity, and they're particularly more, I want to say, nicer if it's above 50% of the range. So we could frame a dealing, looking at this price action, we could frame a dealing range around this low and the highs that we're just taking. So once the dealing range is taken, we're thinking higher prices for retracement, right? I like the fact that this down candle here is causing or creating that displacement higher. Find 50% of the range. This is the boring part for most persons. Lots of lines coming up. Hopefully not distracted. Bearish on DXY and bullish on NAS. Okay, so I'm looking at this candle right here, and I want to frame where is 50% of the range. 50% is right here. So if I'm looking at scalping, or if I was looking at a scalp into premium, worst case scenario was a 7-pip trade. So that's very unlikely. All right, so here we have NAS again, trading through the sell side liquidity pool. All right, here. And I'm going to trying to order, I didn't identify the order block at the low. So this would have been the order block. So on an M5 candle, we have 1 minute. I don't want to see price. Wherever this candle closes is irrelevant, really. I want to see what the next 2 candles do. Ideally, I don't want to see a candle created and then the high of that candle traded through. And then retracements, if the retracements are above this gray box, then I'd love that. I want a candle to be formed here. I want the high to be above this box. I want price to take the high, then come back. And then I'd be interested. If that doesn't happen, I do nothing. Remember, we're trading low probability conditions, but we're still looking for only high probability scalps. So new M5 candle just started right here. I want to see where is the high of this candle, and I want to see if it trades through, and then I'm going to stock longs. 30 points. That's all I need. 30 points. Just 30 points. NFP data is lagging today. Bullish Dixie till FOMC. Actually, I don't share that sentiment, and I'll show you why. I don't share that sentiment because of what I expect for NAS this week. This is what I expect for NAS. I think this is the range. I want to see Monday trade higher inside here. There we go. I want to see Monday trade higher, Tuesday trade higher, then I want to see Wednesday crash. This is what I'm looking for. This is the sell I want for this week. Anything else is just that's interesting. Let's see.
How is his mic muted and he's still hearing? That's weird.
Yeah, I'm gonna remove the option to allow persons to unmute. There we go. Just all chat then. But yeah, so I may be a little bit biased going into the week because this is what I want to see. There's nothing here that invalidates the idea. I don't want this low to be taken. I want them to create the liquidity, more relatively equal lows, and then trade higher. Why I want them to trade higher? Because this falling ahead of the data release this week suggests that there were some investors who were trying to front run the move, which means these guys are currently in profit. The guys who sold here are in profit. Where they put their stops? Above Friday's high. So let me point that out. There's some times when the market's not clearly technical, you have to, well, let me not say you have to. I try to look at the behaviors of the persons involved in the market. And if they overlap with what my bias and what my expectations are, then I think that's a high probability trade. So that's Friday's high right there. And let's see if I add a text top right. Friday's high. So I think most of the stop losses in the market's building up right here. So that's what I want to see. And I want to see lower prices. And that's it. Okay, so if you remember what we're looking for, we wanted to have up candle right here. Well, not the up candle. I wanted that candle to be formed right here. Ideally, an up candle. And I want to see the high of that candle get violated. And then we go along. Roughly about somewhere between 10 to 10.15 is ideally where I'm expecting to get an entry based off this fractal and based off what I want to see. 30 pips is here. This is something else you can do for rules if you truly are an indisciplined person like me. Let's tag that. Delete this here. So I'm tagging these relatively equal highs as the first buy side liquidity pool from a technical standpoint, right? So I want my entry to form below this line, and then taking me to here would give me 30 points. Since we have an order block right here, let's put that here. My area of opportunity should be between here and there. Look at that. Perfect. So the high of this candle is below that 50%, which allows for price to trade above here, retrace somewhere inside this OTE section, and then I'll trade it. If it doesn't form, then I didn't break my rules and took a trade that wasn't a part of my plan. So this trading lower here, even though I want to go long, doesn't have me thinking, oh, I'm wrong, I should probably go short. I can't see a draw on liquidity low from an M15, so I'm outlining the conditions for what I want to see to go long. Yeah, there's still time. Remember, like I said, 10 to 10.15 is where I want to see my entry form. So take this high, or taking this high is important. M1, I'm pretty sure you could find M1 scalps inside here. But to stay in line with what I want, I'm going to move this red line to here. My entry has to form below here. And second thing is I want to see that high taken on M1. So I can take this fib off comfortably. There. We could look at this across any time frame, because now we have the reference points, and we already know the time. No idea what this other blue line is for. So now on M1, that high is corresponding to a nice level that could be used for M1 dealing range. We just had lows taken here. This candle did not close below here. So I'm thinking rejection block ideas here. So now in the next 3 minutes, I want to see them trade through this high, then retrace, and should be fine for longs, or fine for 30 pip longs. Let me say that. From here, this is roughly about a 20-point stop if I enter exactly right here. So I'll be watching that. I'll also be watching this down candle that's forming right now. This could potentially set up a propulsion candle idea. So the next candle trades so the 1003 candle trades through here and then a retracement. But until it takes here, there is no trade. I did a nice short this morning. Nice. The last trade I took was last night. And Darius. We're playing with some longs on NAS. 95% of persons lose money in this market condition, in this delivery. You know what you want to see? Instead of waiting for confirmation, most persons look at this and then they try to trade that. But this is why would you trade before your confirmation point? I have to put it back. Right there. Why would you trade before your confirmation point? Simply because you think that if you enter earlier, this is no longer going to be a 30-point trade, but it could be a 70-point trade. That's the idea that destroys most persons. But anyway, sell side liquidity at the rejection block here. Watching that down candle high. We don't trade through it. I don't expect my setup to form. I'm gonna take this line off now. And this is take this off as well. That's the only information I need on my chart. High time frame order block. Low time frame market structure shifts. And patience. London low is below. That's interesting. I didn't know that. Let's go M5 time frames. This would have been London low. Yeah. All good. So London low is taken. I think London high is taken. It's still a do nothing for me in this market condition, right? It's still do nothing. There's nothing here that says this is a trade. I'm not stocking shorts. I'm doing nothing. No money on the table, no risk on the table. 7 to 8 a.m. Time window that I don't trade. This is where your psychology gets tested. Can you not take a trade even though you spend, I don't know, however long this call is, stalking a setup and waiting for a setup, not seeing what you want for entry, and then walking away knowing that my trade didn't form? What is my A+ setup? I can tell you what my A+ delivery is like. The A+ setup is going to lead to more questions because there are things in my A+ setups that I don't think I've spoken about publicly. So my A+ delivery is between 9 to 9:30. Price protracts or retraces to an array, M15 or higher. M15 or higher array, then 9:30 either takes price exactly to the array, or at 9:30 price is at the array, and then we just displace from there. that displacement should break market structures, and I fade retracements. So to visualize the idea, let's say that this right here is a M15 bearish array. The drawn liquidity for me is somewhere down here. All right, let's just say that. This is 9 o'clock. This is 9:30. I like retracements inside. I don't care what it does. I just want it to be opposing to the direction, because opportunities are born from a change in the state of delivery. I want to see this, there, shift, entry, wherever. This is the delivery I like. This can be amplified many ways. This is like Wednesday midweek reversal fractals, where we have Monday's high, Tuesday's high, and Monday's high here, or it could be different, but Monday and Tuesday's high is somewhere below the bearish array. Price trades up, takes it. Aggressive London, retracing New York, bam. Yeah, but my entry is not going to form between 9 and 9:30. My entry forms after 9:30. So it could be, this could be 9:30 to maybe 10, or 9:30 to 10:30, and then the retracement happens afterwards, and then I go short. That's a delivery I like. There are times when news impacts delivery. So 8:30 usually makes forex pairs go crazy, and then 9:30 makes indices go crazy. So I generally like to see impulses in forex pairs start at 8:30. If it forms before that, then the likelihood of my setup forming earlier increases. But yeah, no setup, no trade. Saying that to the beat of when I move, you move, just like that. No setup, no trade, just like that. No setup, no trade. No. These are the things you do with your mind when you're stalking a setup. Nothing happens. You're staying disciplined. Oh, AU just traded through the order block high that we're looking at. What time frame is this? M15. M5 setups are possibly lining up. Once that high gets taken, we're looking at discount of the displacement. Discount of the displacement, not necessarily. I only look at discount and premium of a displacement if we are away from that displacement and then trading back to it. Then you start looking at consequent encroachment ideas. See, no setup, no trade. So a good, where's that thing? M1. A good lesson here would be that these M1 structures are what most persons are looking at, and they're looking at them for confirmation. M1 is not a confirmation time frame. M1 is an entry time frame. If you use M1 solely for entries and confirmation, it means you have a very deep understanding of price action. It means you know that this is an M5 high, this is an M5 high, even though it looks like this on M1. So trading through that is effectively breaking an M5 order flow. But to be painstakingly obvious, I want this broken before I get interested in pushing that button. Would I sell EU to buy in this condition? Let's take a look. EU delivers a little bit different. There's a huge low right there, which makes all of this delivery sus, which makes the closing price of this candle interesting. Accumulate inside here, then we have displacement. Not a lot of wicks right here, which means we don't have to come back here. Price accumulates there, and then we push. This displacement right here is one, or this one right here is one where I need to see 50%. Selling this, absolute madness. I think this is absolute madness. I'm more interested in, bam, this candle. Everybody should know why. I'm interested in that candle, and since it's low probability, I don't want to be here for my entry. I want my entry to be here. I don't want to be the guy who sees the order block and says, this one is going to work. I want clear indication that this order flow is changing, and then I start my entries. Yeah, my mind said I was going to fumble this now. The moment I clicked on this, my mind said, you know, you're going to fumble AU. But anyway, it's whatever. I like NAS better. Some idea now to trade breakaway gaps. Mistake. Once that high gets taken, you'd be looking at discount of that. I thought somebody said something. All right, so here's another example of when I want to be late to a trade. This was that M5 high that we wanted price to trade above to go long AU. Price is coming back. I expect an order block to be formed here. So depending on how aggressive you are, we could fade this candle or fade this very candle. Put your entry there, put your stop below here, and then frame, you know, somewhere like this. I don't know what that is. Is that worth my time? That would have been for about 20 pips, which would have been fine. I want price to confirm to me that this candle is staying intact, and then I trade, because today is a low probability market. So we're looking for high probability setups in low probability markets or low probability conditions. This is not high probability yet. Taking this high, coming back to that candle, that's high probability. So in the couple of minutes we have left, let's do this. That's a large wick. So let's put it here. And that's 10. I get interested in seeing that form from a trade possibility if we take this high. And this is where I'm going to be putting my stop. No confirmation, no trade, no hindsight. Oh, I should have gone short. No, we don't change in the middle of your analysis without good reason. M15. Yeah, no way I'm selling this. Absolutely no way would I sell into this right here. It's way too discounted for me to sell that. So today's going to be a day, well, today might be a day where what I want to see doesn't play out on the call. Like last week, the draw on liquidity I was expecting for NAS didn't happen. Took a loss? Yes, I did. Does it bother me? No, it doesn't. You lose, most persons take large losses because they're unwilling to take a small loss. And you know, we all know that if it's low probability and you're forcing it, then that's exactly what it is. You're forcing a setup. Ego. You don't want to be wrong about your analysis. Okay. No setup, no trade. No trading through here and retracing. No touching it. Oh, setup was there. That's fine. If you followed your rules and you took a loss, no big deal. But right now, I need this and retracement. I think we're about to end. So I'm gonna check my schedule. If my schedule is good, I can hop on another call for maybe another 20 minutes to see what happens. Or if you're watching it live, you know what I want to see for if we're going long.